Did you know medical professionals can purchase a home with as little to no down payment, even with high student loan debt?
Today, we're breaking down a powerful loan program.
I'm Isabel Machrone.
And I'm Rosa Ortiz.
We're real estate professionals in Southern California.
And each week, we break down what sellers and buyers really need to know right now.
This is Let's Talk SoCal Real Estate. Medical professionals can purchase a home with as little to no down payment, even with high student loan debt.
That's pretty amazing. Today, we're breaking down a powerful loan program.
Joining us, we have a mortgage loan expert,
Joni Kapedani with Easy Funding Home Loans.
Welcome, Joni.
Well, thank you, ladies. Thank you so much for having me here. I'm looking forward to this episode and to break down this new program for medical people like doctors and nurses.
So before we dive in, can you tell us what you do and how you got started in the industry?
Absolutely. Actually, I've been in the industry. I'm just looking at the data right now, and I just realized. I started in 2017, 9 years in the industry. Time flew by so fast, actually.
It sure does.
I started through my cousin. He was the one who introduced me to mortgage. He's actually the owner of Easy Fundings. He's the one who told me, like, I see potential in you, so why don't you come and join my team and let's all grow together. And when I started, literally, I started from doing paperwork, paper pusher, not even processor. I started as a loan officer assistant. I was doing disclosures. And he did give me a great opportunity where I was learning from everything from A to Z. And later on, I started moving up the ladder, went from a loan officer assistant to processor, junior underwriting, and then here I am now as a loan officer.
That's amazing. You've touched everything in the background, what makes you even more skillful in all the areas behind the scenes.
Thank you.
So what kind of clients or transactions do you typically work with?
Right now, we here at Easy Fundings, we have all sorts of different scenarios, different loan programs. We offer programs as the program we're going to be talking today, the medical loans for doctors and nurses. We also offer regular, conventional FHA loans, VA loans, down payment assistance loans. And we work a lot with non-QM loans, which is non-qualified mortgages. And I'm sure we're going to touch bases later on a different episode on that. But yes, here at Easy Fundings, we work with different loan programs.
What sets you apart in the field and the way you work with clients?
Well, it's actually not just me, but it's a whole Easy Fundings and the way we are all trained and the way we all operate as a family. It's not just me personally or somebody else. As you guys know, we're always available during the week, after hours, on the weekends. It's just the culture we all built in together along the journey we actually took, and being able to figure out different loan programs, different scenarios when other lenders wouldn't be able to do it.
And to
We would,
structure them.
Yeah, we would just structure it correctly. And another thing is we have our underwriters in house. So if I don't know the answer or another loan officer doesn't know the answer, the underwriter is literally next door or just a phone call away.
And that's a huge plus.
Absolutely. And it's not just underwriter. We also have like a scenario desk. We have like TBD approval. So what we do differently also is when we have a client and before we don't just pre-approve them. We have a TBD approval team, which TBD means to be determined on a property, but we get them approved with all conditions before they open escrow, before they even start shopping. So by the time they find the right property, we are 100% that these clients will be able to buy, and we're not going to have any surprises in the middle of the transaction.
I'm glad he touched base on that because that's exactly what our buyers episode was about, is just having that underwriter's approval and not having any hiccups during the escrow.
That's great. And that's the type of clients that you work with and making sure that they are fully ready to go.
They see how they submit an offer, we get it accepted, and we try to close this within 2 weeks to 21 days.
Easy Funding's home loans. Is this a family business?
Well, my cousin is the owner, and yes, it is type of family business. It's not just family that works there. We have a lot of amazing loan officers, amazing search underwriters that are not part of a family, but we're all considered a family of Easy Fundings.
We know Tano, and Tano is amazing. So yes, he treats everybody like family. All right, let's get started. with the medical professional loan program. Can you define it and what is the purpose of the program?
Well, a medical professional loan program is designed to make homeownership more attainable for doctors or people that are in the medical field. The reason why this program is out is because especially doctors, they go through a lot to get where they have to be. Their student loans go up the roof. Like
Yes.
I've seen $200,000, $300,000, $400,000 in student loans, and this program is to favor them and be able, as soon as they graduate and they start working in their field, they're able to actually buy a house. They may not have a down payment, but this program is going to make them qualify with little to no down payment at all.
Who qualifies for this loan?
Yeah, absolutely. So it's going to be medical doctors, doctor of pharmacy, dental medicine, everybody that has an MD or a DO or a DMP, the CRNA can qualify for it. And what you need is very simple. It works like any other loan. We are going to need income documentations. In this case, we don't need assets. We may need some assets for closing costs, but always a seller can help with it. As long as you have an MD, DO, DDS, CRNA, Doctor of PharmD, as long as you have those, you are eligible to qualify for it.
Same documentation that a standard conventional or FHA loan would require.
Same documentation like verification of employment, W-2s, pay stubs, and they're just going to want to see the degree that you're holding to make sure you're eligible for the program.
That makes sense. I was going to ask, where's the proof?
I'm going to go online and get myself my degree.
The beauty of this program is they don't take into consideration that student loan debt, which is the biggest hurdle to get past.
The debt to income ratio will be too high. But in this type of program, which is specialized for people in a medical field, they will not consider the student loans, even if they're on a deferment status.
Even if they're not in deferment, or they have to be in deferment.
If they are in deferment. If student loans are having a minimum monthly payment in there, then you'll consider it a monthly payment. But usually the way student loans work, when student loans are in deferment, and if you decide to do a convention loan, and let's just say you have a student loan balance of $200,000, conventional loan is going to require you to hit it with debt to income ratio with 1% of the total balance on student loans. So on a $200,000, you're talking about $2,000 a month extra added into debt to income ratio, which that's going to bring your buying power much lower, or probably you're not even going to be able to qualify for it. This particular program that we're talking about, if the loan isn't deferred, we don't hit the student loans. If they're not deferred, they do have a monthly payment, but the monthly payment is always lower than the 1%. So
very minimal.
Does it matter how old the loan is?
It doesn't matter as long as the loan is in a deferment status.
How long do they have to be in the field to be able to qualify?
So usually, as soon as they start a new job, let's just say they just graduated and they start a new job, we can continue using their income right away. And the reason why is because this type of program is very similar to FHA conventional programs when it comes to some of the guidelines. They will count the university time as an employment history. So you wouldn't have to wait a year or 2 years. And a good thing about this program also, you do know that usually if you're self-employed, because a lot of doctors are going to graduate and they're going to open their own clinics, usually in self-employed programs, they require for people to be in the business for a minimum of 2 years. This program only requires 1 year of self-employed business. Somebody just opened their own clinic, a year later, everything is going great, they're making good money, they want to buy a new home, they don't have to wait 2 years. They can buy a new home with 0% down payment and no mortgage insurance.
So many perks to the program. So we just went over the student loan debt and the amount of time in the business. And now, can you talk about the mortgage insurance part?
Absolutely. This program, no mortgage insurance required. And you can put 0% down payment and you're still not required to pay mortgage insurance, which is great because that's going to save you a lot of money in the long run. Mortgage insurance, they vary from $200 to $400, $500. See mortgage insurance be as $1,000 a month. It all depends on how big of a loan amount it is. But this program does not require mortgage insurance at all, and you can be saving a lot of money in the long run. About $5,000 to $12,000 a year.
All right, let's talk about what about the loan, typical loan amounts in the counties: Riverside, San Bernardino, Los Angeles, Orange County. Are the loan amounts different?
No. So these type of program, they have their own loan limits,
Okay.
and it doesn't matter what county you are. The maximum loan limit for this program is $2 million. You can buy a $2 million house with no down payment and have no mortgage insurance and keep your loan amount at $2 million. I'm gonna be honest, these people will afford the monthly payment.
Yes, yes.
So they've worked so hard in their life. It takes them a while to go to the next stage and graduate and start working. It's like
And
I
they
know it's not
definitely deserve it. They definitely will deserve that.
and I mean they're still servicing serving the community. And
Yes.
Yes,
we
they
depend
do.
on them a lot. So this is a great program for them.
What are the interest rates?
The interest rates are slightly different than a regular conventional FHA loan. They are slightly higher, not by a lot, but the reason for it is because somebody is coming with no down payment and not going to have any mortgage insurance. The interest rates will be slightly higher. I did price one today before our meetings just so I can have an idea. I priced with 720 FICO score, credit score, at $1 million loan amount with no down payment. I was getting about 6.875 rate.
That's still great. 6.875. Okay.
That's where we've been and teetering
Past
for
2 years, yep.
the past 2 years.
Is it a 30-year loan?
Actually, the terms you get to pick. You have the option to pick. You can do a fixed rate or you can do an arm rate too, and you can pick
15 or 30-year loan?
15-year, 20-year, 25-year, and 30 years.
So the consumer still gets to choose their options of what they prefer: 30-year, 20-year loan, and whether they want a fixed rate or
an arm.
an arm.
And if they do come with money for down payment, does the interest rate change?
It will change it for if they come. I mean, the maximum down payment they can come with is going to be 9.9%. For this program, they cannot come with more than 9.9% down.
What is the typical standard requirement? Is it usually 10 to 20%, right? And here you're qualifying for a larger loan amount with no mortgage insurance.
It's the biggest one because I understand there are a lot of programs out there for people that may not have money and they can do like a down payment assistance and stuff. But all of these programs will have a mortgage insurance. Compared to this particular program, you can buy a $2 million home with no mortgage insurance.
What is the application process like?
It's very simple. We have our underwriters in house, which we can pre-approve them on right now. The way I'm going to go over the matrix really quick so people know. The minimum credit score to qualify for this program is 680.
Okay.
As long as you have a
Great.
680 credit score, you're doing great. Even if you don't have a 680 credit score, it's completely fine. You can call me. We can jump on a phone call. I'll help you on how to get your credit score up by probably paying some debts off or probably reviewing your credit report, and we can get in contact with some credit repair specialists.
A great point, Joni, because sometimes people will shut it down because, I don't have that credit. But with Joni's resources, he can definitely help you raise that credit score.
Absolutely. Just because they may think that they have a low credit score, or 600 credit score, and oh my God, 680 is too high. No, it's very achievable, and it's
Yes.
very achievable within a month to 2 months, as long as we work together.
Exactly. As long as you have a game plan and everybody's being proactive, it's definitely attainable.
How long does
Yeah.
pre-approval usually take time-wise,
Usually the pre-approval process, as I said, the way I like to do my pre-approvals are very simple. I like to get in contact with the client directly, do a phone call introduction, see at least we hear each other, we know that they're talking to actually real people and not just via emails and AI. And I'll go over how the process works. I'll send them an application link so they can go and complete the application online, which everything is encrypted. And
yes.
usually, once I have everything back, if they complete the application and I have the items that I requested from them, like W-2s, pay stubs, tax returns, degree in this case, if it's regarding this program. Once I review everything, I can go ahead and issue a pre-approval letter by Wednesday. Or by any chance, sometimes we can need some extra additional information that I'll reach out directly to the client, or we probably may need like a verification of employment too.
Yes.
For them to break down the income, we'll go ahead and request it from their HR. Obviously, as long as borrower gives us the thumbs up that we're good to go. And once we have those, as I said, by Wednesday, Thursday at the latest.
It really depends on how quickly the
Client.
applicant is moving, right?
Absolutely.
I know you can move very fast, Joni, but it depends on how fast the applicant, submits application, submits the paperwork. But I've seen as little as 24-hour turnaround that you can have a
Correct.
pre-approval, or as long as 3 days.
Okay.
This is when pre-approval has done over 10 days, but that wasn't because we were lacking.
It wasn't your
That was-
fault. Yeah.
Yeah, it was clients or the applicant was busy. They were busy with work. They couldn't provide all the documentations needed. So we have also, I want to make sure that they know we work on their pace. So
Exactly.
we're like to be pushy and stuff. I want to make sure that they know that we're part of their team and we're trying to get them to the next step. But obviously, we don't want to be the type of lender that they're going to be like, please give it to me right now.
Thank you for stating that, because that's important for us when we're working with our clients. We don't want a lender that's going to be too overwhelming, but at the same time, communicate and check in and make sure we can rely on you collecting all the documentation.
And medical professionals, sometimes a lot of them work nights. So you have to be sometimes available
That's
to
a
be
good
able to
point.
meet with them. It's after hours.
They're day
and
sleepers, and a lot of them.
Usually, my phone stays on 24/7. And I had an agent that the client would do a group chat together. The client would text like 9:30, 10 p.m. and I would reply right away. And the agent would be like, "Oh my God, Yoni, like why are you replying so late? They need to know that we have a life outside of work." I was like, "Actually, we do have a life, but if the client is texting us at this time, it means that he didn't have time during the day. So let's service him too. We have
Thank
a
you
life.
for-
Our job is to service the clients, and it doesn't matter if it's 9 p.m. or 9 a.m. If we're available, absolutely."
That's one of the things I love about Easy Funding's home loans. You guys make yourself available and tailor to the client's needs, because like Isabel said, especially our medical professionals, they all have very different hours.
This is not just me. It's like Easy Fundings in general. I mean, the culture, and Rosa is very familiar with it too. And is the culture we all grew into the company, like the way we learned from each other. We work as a team. We don't have competitions there.
Yes.
that's great.
Can you talk about what is the escrow period like? Can you close one of these loans in 21 days, or do you need 30 days? What is the typical timeline?
Usually in this particular program, it is about 30 days. To be safe and without like having any surprises later on, it will be 30 days. As long as we have the documents up front, then it may close sooner, but to keep it on a safe spot with no surprises to when it comes to the listing agents, and we don't want to make them upset either, will be 30 days.
Tell us one of your favorite moments of working with any particular client that you can share with us.
Well, a particular client, I have a lot of them, but I have one success story, especially on this loan program that we're working with, and I'm currently working with right now. The loan hasn't closed; should be closing very soon, hopefully within the next 10 days. The client actually, she graduated, and she hasn't actually started making the big money, but the husband is making good money, and that's a good thing. That if the spouse is not making as much money, she or he are in a medical field, will qualify because they're married. So this story is we were able to qualify on this particular program with only using a little bit of the spouse's income, because she's still on a residency and she still hasn't gone to work for the hospital yet. She's still doing her practices, and she's making very bare minimum. It's about $25 an hour. But the husband, which he's a police officer, is making good money. And guess what? We're able to help him buy with 0% down payment and $100,000 loan. So they're very happy. Agents are extremely, extremely happy. And we're just waiting. I mean, appraisal is in already. Most of the conditions have been cleared by the underwriter, and we're just waiting to get it clear to close.
I love these success stories because they really teach us what the possibilities are. And most, even us, we wouldn't know that that's possible, that they can actually purchase a home with the spouse's income. They don't have to wait to begin their career. And because what happens when we wait? The prices go up and then they end up buying a little bit higher.
Absolutely.
So if they can do it now with, help of the spouse's income, if they're not completely in their job yet, then there's a perfect scenario success story.
Is there anything that we missed that we didn't ask or that you want to share?
I think we've covered most of the of the stuff, and usually there is always new stuff that are coming up, and every scenario works a little bit differently. So I do encourage everybody that sees this and they to reach out to us. We can go over the scenarios, we can jump on a phone call and see how we can help them. Even if you think you're not making enough money, or you think you probably are not qualifying because of your credit score may not be where it needs to be, give us a call. Let's see how we can help you. We're going to find a way to make it work, and we can get you into a new home.
That brings me to, how can the audience connect with you, Joni?
Simple. Just give me a call at my cell phone number, 909-646-0636. As I mentioned, I'm available 24/7. Feel free to call me or text me, and let's schedule a meeting together.
Yes, we will share that information in the show notes. We'll put it on how to reach Joni with Easy Fundings. You mentioned the couple earlier. The husband is a police officer. Do you also handle the program that is for first responders?
Yes, but first responders program, they're a little bit different. They're not same as this particular program. They're considered more of a down payment assistance program. They still have to pay mortgage insurance, and they still need to pay the assistance back. Sometimes after 5 years, that assistance will be forgiven. They do work slightly different than this program. This program is a new program. We just got it, and it's an excellent program.
Great.
Excellent.
Regardless of what your scenario is, what your situation is, you're self-employed, you don't file enough, you don't report enough income in your taxes because you have a lot of write-offs, and you may think you're not going to qualify. Regardless of what your situation is, we'll be sure, all of us here together, to make sure we show them how to be able to buy a home. If it's not now, within the next month or two.
If you're a doctor, resident, or medical professional thinking of buying a home, this home loan program can open up doors you didn't even know existed.
The key is working with the right team that understands your unique situation.
Thanks for listening. Let's talk SoCal real estate.
If this episode helped you, be sure to subscribe, follow, and share it. And tune in for new episodes wherever you listen to podcasts.
And if you're thinking of buying or selling in Southern California,
click the link in the show notes for your free buyer's guide. And if you have any questions, email us. We'd love to answer them all on the upcoming episodes.
Isabel Machrone and Rosa Ortiz are licensed real estate agents with Keller Williams College Park. Each Keller Williams office is independently owned and operated.
The information shared in this podcast is for informational and entertainment purposes only and reflects our personal opinions and experiences. It should not be considered legal or financial advice.
We make no guarantees regarding accuracy, timelines, or results. We always recommend consulting with licensed professionals and doing your own research before making any real estate decisions.